moving forward, if you guys have just tuned in, we are all geared up for session 1. And of course, because this is the Sharia Investing Virtual Conference, we can't go any further before we start talking about the principles of Sharia per se. And when we want to talk about the principles of Sharia, we have to bring you guys into the conversation as well. So if you look around your screen, there's a button for the poll. And I would like to invite you guys to do a quick poll. Yep, it's up there, I can see now. And the conversation is actually the question is actually quite straightforward. Do you think that the Islamic capital market upholds the Sharia principles, or merely a backdoor of perhaps for conventional capital market? And if you can just answer that question very quickly before we start into session 1. Again, if you've just tuned in into the webinar, thank you for taking the time to spend your morning with us. We are all ready and set to go for the first session. Let me invite all my panelists onto the virtual floor. We have with us Professor Dr. Ashraf Muhammad Hashim, the chairman of the Sharia Bursa Malaysia. Thank you, Prof. Ashraf. Next, we have Datuk Dr. Daud Bakar, the Amanie Group chairman, a good close friend of ours actually for the longest of time, more than 10 years. We've been speaking to Datuk Daud over various issues. Again, thank you, Datuk Daud, for taking time to join us. We have Dr. Aznan Hasan. He's of course the Associate Professor of the Institute of Islamic Banking and Finance, or IBF. And finally, Encik Noraizat Shik Ahmad, the General Manager of the Islamic Capital Market Development of the SC, or Securities Commission. And I hope you guys have answered the poll. I'm just going to answer it myself as well. There you go. Well, we have various results. Okay, some of you. Okay, so the results are coming in. So as the results are coming in, may I invite our first speaker, Dr. Aznan Hasan, the Associate Professor of IBF. Dr. Aznan, we want to talk a little bit about how does the Islamic capital market differ from the conventional capital market, and more importantly, does Sharia investing actually uphold the principles of Islamic ideals, or is it just a way or a convenient way for us to use this as a conventional system, but masking it as an Islamic model right up front? Dr. Aznan, you have the floor.
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh, and thank you very much. Thank you, Brother Ibrahim, and the rest of the panelists, Prof. Ashraf, Dr. Daud, our brother, Dr. Noraizat. Taking from the question asked whether how different Islamic finance from Islamic investment from conventional, Islamic capital market from conventional.
Okay, may I now invite Encik Noraizat, because we're still having some technical issues. Can we try Dr. Noraizat, the General Manager of Islamic Capital Market Development of SC, see if the internet connection there is okay?
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, I would like to thank Bursa for the invitation. I think it has been a while since we participate in Sharia investing organized by Bursa. I also feel very honored to be on the same panel as our renowned Sharia scholar, Dr. Daud, Dr. Aznan, as well as Dr. Ashraf, who are also the members of our Sharia Advisory Council. I have learned a lot from all of them, I think, in my interaction with them during the SIVC meeting on a monthly basis. I've been asked to talk about Sharia screening methodology within a 10-minute time frame. I think there's a lot to actually squeeze, but I will try my best. I think perhaps I'll start off with a brief background in terms of why we started the Sharia screening methodology and Sharia compliance review. Perhaps we can go to the next slide, please. Okay. Sharia compliance review was one of the earliest developmental initiatives undertaken by the SC to actually develop the Islamic capital market. It started in 1995. At that point in time, the Islamic Instrument Study Group, which was the predecessor for the Sharia Advisory Council, undertook a study to look at the listed company. At the end of 1995, they actually came up with the criteria to actually determine the Sharia status of those listed company. At that point in time, the IISG only looked at the activities of the company for the purpose of determining the Shariah status of this company. 2 years later, in 1997, the SC released the first official list of the Shariah compliant review. 2 years later, Bursa actually launched the Kuala Lumpur Shariah Index, and subsequent years in 2004, a significant development because we also undertake Shariah compliant review at pre-IPO. This was actually done on request from companies going for IPO. They wanted to put the Shariah status on their prospectus. I think the intention was to actually attract potential Islamic investors to actually subscribe for the shares before they actually listed. 3 years later, Bursa also launched FBM Shariah Index and FBM Shariah Index. The most significant development that took place was in 2012 when we actually announced the revised screening methodology. This is actually to incorporate the financial ratio into the screening methodology. And finally, in 2013, we issued the first list of the Shariah compliant securities based on the revised methodology. Next slide, please. We adopt dual approach of screening in terms of looking at the quantitative as well as qualitative aspect of the companies. In terms of the quantitative, as I mentioned earlier, we look at the business activity benchmark. There are 2 benchmarks that are applicable for the purpose of determining the Shariah compliance status. We have the less than 5% benchmark as well as the less than 20% benchmark. For those activities that fall under the less than 5% benchmark, those are activities which are clearly prohibited from the Shariah perspective. And this provision are mentioned clearly in the Quran as well as in the Sunnah. And on the right hand side, you can see those activities that are listed under the less than 5% benchmark. On the other hand, the less than 20% benchmark are those activities which may have the non-permissibility element within it. So in terms of determining the Shariah status, we will look at contribution from these activities and to the group's turnover as well as group PBT. In determining the status, we would actually request for information from the company in terms of the breakdown of their activities. In terms of the process that we go through, we will actually review the audited financial statement of each company listed on Bursa, and we will compute the respective ratio. If the information is not available in the annual report, we will request for the information from the company. We also look at financial ratio benchmark. This was actually introduced in 2013. What we look at is we look at the debt over total asset as well as cash over total asset. And we take into account the interest-bearing debt, and also in terms of cash, we look at cash placed in conventional account and instrument. When we started the Shariah compliance review in 1995, this was not incorporated as yet because at that point in time, the Islamic finance industry was very small. In terms of the Islamic banking itself, there was only 1 or 2 Islamic banks at the point in time. In 2010, when we undertook the review, I think the Islamic finance industry in Malaysia has actually grown. The number of Islamic banks has actually increased to about 16. The size of Islamic capital market has grown. Companies were issuing sukuk. There were many Islamic capital market instruments in the market as well. So because of the significant development and growth of the Islamic finance in Malaysia, so SIVC decided to actually introduce the financial ratio benchmark as another benchmark for the purpose of determining the Shariah compliance status. So therefore, we look at both profit and loss activity of the company as well as how company actually finance their operation. And our screening methodology is also in line with other international index provider as well. On top of that, we also look at the qualitative aspect as well. I think this is very unique to Malaysia. We took we look from the public perception or image as well as maslahah or public interest. But I think this qualitative is rarely used in determining the Shariah compliance status of the company. When we compute the ratio, if, for example, we find the ratio actually is breached, we will actually notify the company and inform that they will be potentially excluded from the next list. The company has avenue to actually, respond to us on the ratio, So when the list actually comes out, so they are aware that they will be excluded in the list. The list is issued twice a year at the end, last Friday of the month of May, as well as last Friday of the month of November. As far as the review is concerned, we only do once a year based on the availability of the latest audited financial statement. Why we release the list twice is to actually cater for companies with different year-end. So therefore, you may potentially find companies which has been excluded from the May list, then it may be included in the November list if they are able to issue their audited financial statement before the release of the list in November. Next slide, please. Okay, the Shariah compliance review, when we started, I think it also has actually acted as a catalyst for the growth and development of the Islamic capital market. When we started off, in 1997, the market capitalization was about 210 billion, but it has now grown to about 1.1 trillion by the end of 2019. The number of Shariah compliant securities has also increased over the years. I think if you can see on the slide, in 2009 there were about 845 companies, but in 2019 the number had actually gone down to 714. That was because the introduction of the financial ratio, and a lot of companies were actually excluded because of the financial ratio. So therefore, in terms of percentage, it has actually gone down from 88% to 77%. As far as the catalyst, by having the available pool of Shariah compliant securities, the fund managers are able to actually create Islamic unit trust fund. Therefore, we have seen the growth of the Islamic fund management industry in Malaysia. Today, the size of Islamic AUM is about 181 million. In terms of the number of unit trust fund, there are about 236 Islamic unit trust fund in Malaysia. The number of Islamic wholesale fund, there are about 58. I think as Tan Sri Wei mentioned, I think Malaysia is the leading Islamic capital market center in the world. I think in terms of the AUM, we are second to Saudi, but I think in the recent study that was undertaken, I think a lot of funds in Saudi are money market funds. I think in terms of the breadth and diversity, we have the most in Malaysia. I think we have diversity of product and services as well. In terms of the ETF as well, I think because of the availability of Shariah compliant securities, you are able to actually create, exchange traded fund. In terms of the various unit trust product as well, you have a combination, a lot of combination, mix, balance, all of them. In terms of Sukuk, to some extent, it has also contributed to the growth of the Sukuk market. Of course, the Sukuk market was already growing before we introduced the reverse screening methodology. But when we introduced the reverse screening methodology, a lot of companies which had conventional borrowings actually converted their conventional borrowing into Sukuk. So you see a lot of issuance of Sukuk by all these companies to replace conventional borrowing. But of course, these are companies that are concerned about their Shariah compliance status. They want to be Shariah compliant, to attract Islamic investor to invest in the company. And also because of the availability of the Shariah compliant securities, Bursa also is able to actually construct various Shariah indices, some of them are tradable as well. In terms of value proposition from the issuer perspective, I think if the company is Shariah compliant, then they attract a wider investor pool, both conventional as well as Islamic investor. There are companies, which are Sharia compliant, which subsequently has been excluded, and they want to actually get back into the list as well. I think because they see the value proposition of being Sharia compliant. And also you have companies which has all this while been Sharia non-compliant, but because, sometimes they get strategic investor to actually invest in the company, and this strategic investor from Middle East, they want, the company to be Sharia compliant, therefore this company will make effort to become Sharia compliant as well. Of course, some of the activities by nature are Sharia non-compliant, so nothing you can do about it unless they dispose of the business or they reduce the business to less significant level. But overall, I think in Malaysia, I think those issuers, which especially those in the top 200 company and large market cap or medium market cap, I think their value proposition, because you have a lot of Islamic investor, in terms of the Islamic fund, in terms of the institutional investor and the like of Tabung Haji, as well as EPF, I think then it is something that they would like to retain their Sharia status. Thank you.
Thank you, Encik Noraizat. There's plenty of conversations and questions that I can follow up with that, but we will pause that for a bit. We'll bring in on the other panelists. We'll try again, Dr. Aznan Hasan. Dr. Aznan again is, of course, the Associate Professor of IIBF, or the Islamic Institute of Islamic Banking and Finance. Dr. Aznan, let's rephrase the question. How does capital market differ from conventional? And of course, does Sharia investing actually uphold the Islamic principle? I would like to draw everyone's attention to the poll answers. 53% believes that Islamic capital market does uphold the Sharia principle, and about 30%, or about 1/3 of people watching this, doesn't agree to that. Dr. Aznan, can we have your views, please?
Thank you very much. My apologies for the technical glitch just now. Very interesting poll that you have there. Your question whether Islamic finance or Islamic capital market different from conventional, my answer is very simple, definitely different. So what is Islamic capital market? Islamic capital market is where you have the practices of the market that comply and adhere to the Sharia principle. So means that when you do the capital market, when you do banking, when you do insurance, for example, when you do capital market, you have to comply with the principle of the Sharia. So this is clearly demonstrated by what Noraizat has shown us just now, where we see that the principle of the Sharia, for example, no interest, we exclude all the conventional banking, no gambling, no uncertainty. So we exclude all the companies that having sort of gambling-based kind of businesses. No dealing with non-compliant item, for example. We exclude companies that have dealing with, say, for example, pork-based, or say, for example, dealing with liquor. So all those are the Sharia principle that has to be adhered to when you do Sharia compliant capital market or businesses, for example. So, but if you're looking at the screening that has been shown by Aizat just now, it showed to you very clearly that all those sectors that does not comply to the Sharia, all will be excluded from our list of Sharia compliant stock. So to answer to answer also you on that matter, does they comply to the Sharia principle? The answer is definitely yes. So even in Sukuk, for example, the one that I gave just now is equity market, for example. When you invest in equity market, you will exclude all the shares of the company that does not comply to the Sharia. So you will also not allow, say, for example, you go for the future market, for example, you cannot go for the financial-based future market, for example. You cannot use future interest rate as your investment, because it will not be able to comply to the Sharia, because we exclude anything to do with interest for that matter. So that from equity point of view. If you go further to Sukuk, for example, when you issue Sukuk, for it to be called Sukuk and compliant to the Sharia, you have to ensure, first of all, that contract that you use are complying with the Sharia. The second one is the business that you are into must be in compliance with Sharia. So if, say, for example, the company is a non-Sharia compliant company, that the money that they get from the process of the issuance of Sukuk, they want to do it for Sharia non-compliant purpose. So it will not be accepted. As Isaac just mentioned just now, whatever structure that you want to do, is the underlying business is a non-compliant business, then you won't be able to issue sukuk. For example, a conventional bank want to issue sukuk for the purpose of doing business in their conventional manner, then there is no way for you to be able to issue sukuk for that matter. That shows very glaringly that Shariah or Islamic capital market is totally different from conventional, and it does practice the Sharia compliant screening methodology, Sharia compliant practices that has been enshrined in the Sharia principle for that matter. Okay, what are the advantage of doing Islamic capital market compared to conventional? In the capital market, you have two types of investors. If a Muslim, of course, adherent to the Sharia principle, I think that is one of your utmost principle that you have to adhere to. So when you invest in a Sharia compliant manner in Islamic capital market that follow Islam principle, so it comply with your own principle, religion principle in investing Sharia compliant. So whilst you make money, at the same time when you generate return, at the same time you also adhere to the principle of Sharia that you follow basically. If, for example, for non-Muslim, non-Muslim may ask why you want to invest in Sharia compliant purposes. The answer is very simple. When you invest in a Sharia compliant purpose, it's not only about following the Sharia principle. If we study the component of the Sharia principles in investing, it is very much largely is socially responsible investment. So when you invest in a Sharia investment, for example, when you able to generate return depending on your appetite, whether you are high risk, low risk, or middle risk, for example, and you structure your portfolio based on that, at the same time you will also be able to comply to what we call socially responsible investment. Can you imagine you generate return at the same time you preserve environment, you will help, I mean, these companies that adhere to the principle of morality, socially responsible, looking further, not just making for money, but also to the development of the people, environment, taking care of the climate change, for example. So all those principles of investing in responsible manner, basically you will get in Islamic investment for that matter. I think that's main big advantage in terms of investing in a Sharia compliant manner. Thank you.
Dr. Aznan, very quick follow-up. There is a need for investors to think about socially responsible investing. Tan Sri Wahid was alluding to it in his speech. What would be the importance or the need for investors to think about being a socially responsible investor?
Okay, socially responsible investment basically avoid investing in businesses or doing businesses in businesses that are not supporting for the social social development of the people, also not supporting the environment, for example. So we avoid all those liquor, for example. We avoid the tobacco investment, any businesses that does not comply to the climate change, for example. So that is what we call socially responsible investment. What is important here is that we have to look at long-term investment and long-term prosperity. When we make investment, make money, we should not forget that we have to consider the long-term sustainability of not only our investment, but also our life and our society later on. So socially responsible investment allow you, while you make money in your investment, as I mentioned, depending on your appetite and also your strategies and everything, is also allow you to generate return at the same time, preserve the morality, preserve all the planet, preserve the climate change, and ensure that later generation can also benefit from the world that you leave to them in a more safer manner and a more livelihood situation. That is basically what I think all investors should consider: socially responsible investment and also Sharia-based investing.
Thank you, Dr. Aznan. Dr. Daud, maybe we can listen to some ideas on defining the Islamic principles and the concept of Sharia investing. Many of us, because we are attending the Sharia Investing Virtual Conference, many of us are still going to find that answer. Could you help, I guess, explain the differentiation between Sharia investing and socially responsible investing?
Thank you very much. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. And a very good morning to all of you, the panelists, as well as the esteemed participant of this event. Thank you very much, Bursa, for having me and my colleagues to enlighten everyone on a topic which is very close and dear to our hearts, every one of us. I think we have heard from both Aizat and Dr. Aznan many insight and many interesting concept and principle pertaining and working on the ground as far as Islamic capital market is concerned. And these are very important principles that we cannot compromise, that we should uphold all the time to ensure that we are very much intact to the Sharia compliant. I think if you allow me, Ibrahim, I wanted to go a few steps back, few decades back, if you like. I started, engaging with this issue since 1997. I think Isaac mentioned about 1995. Then I joined in 1997. I joined the Sharia Council of SC in 1997, and we worked hard way. Basically, during that time, there was no references, there was no best practices around the globe. The Dow Jones came in 1998, the first index of the world. But in Malaysia, before SC, we have had the experiences of both Bank Islam Malaysia Berhad Index, Islamic Index, and RHB Islamic Index as well. So these are the two private initiatives which took the challenge initially to open up the market to help the investors who are Muslim, non-Muslim, who are looking for ethical, for feeling good kind of investment. They're putting the money into areas, industries which are good financially and good in terms of avoiding all the sin sector, if you like, from the gambling, from the pornography, from the weaponry, all the way to uncertainties and what have you. And that includes also financial interests, which are still one of the taboo in the Islamic world and the Western world as far as the Christianity and Judaism teaching are concerned. Then we have seen the first effort by SAC in 1997 in a very small way, very humble way, if you like, a very humble beginning. We cannot claim to be the best of the best that time. Even until today, we are still learning. Everyone's learning how to make our Islamic investing world perfect. So this is the whole process, the whole journey to make it upgraded from one time to another. And the moment we have the screening, as you can see, there's a snowball effect. And I have to mention, and perhaps some of the speakers mentioned, and Tan Sri yang Bakar mentioned and alluded to that in Malaysia, we have very strong demand. We have a great theory of demand and supply, because there's no point of creating the product where there's no demand. The demand comes from the big boys in the market, big investment houses from EPF, PMB, Tabung Haji, Co-op, and many other pension agencies, which is quite unique in the world. I have not seen that anywhere except in Malaysia, where we have hungry investors. Hungry investors, they are looking for Sharia compliant. That gives the motivation. So fast forward to cut the story, long story short. So when we did the screening for the first time, it was not perfect, I have to say. Isaac mentioned that we revised in 2013. It created a lot of activities which are beyond our expectation. I wanted to conclude that why we need the Sharia investing, and to conclude my intervention for this session as well. When we have the Sharia screening for the first time, without realizing that we are opening so many areas of market industries, we are opening the areas of derivative products for ETF, for the option, by having the shares which are compliant, the mother share compliant, so we can create all the derivative Sharia compliant way of doing things, which is quite advanced in Malaysia, I have to say. We tend to take the challenge to create new products. And that leads to the unit holders and mutual trust in various categories in Malaysia. Small, big AUM. We have from 50 million all the way to 1 billion and more. So in Malaysia, it's very interesting market in Malaysia. Then we have Sukuk issuer, those listed companies. They are Sharia compliant. They wanted to tap into Sukuk, the fixed income instrument, Sharia way as well. So it creates another vertical of Sharia capital market, different from equity, but it supports the equity market. When they issue Sukuk, they will help the shares of the company to go in because they have more capital, more liquidity. Then we have the banking sector. Of course, before we make the revision 2013, we allow the bank to have, borrowing conventionally. But 2013 onward, bank cannot afford but to have the Sharia compliant account and Sharia compliant leverage or financing. Of course, we allow up to 1/3, but from nothing, we have moved all the way to 1/3 tolerance. So again, it boosts the banking asset in Malaysia indirectly or directly, as one may interpret accordingly. IPOs, again, we never dreamed that one day we're going to screen the IPOs. Now people are coming to knock our doors at SC level. How could I become Islamic IPO? Because they know the demand is so huge. So they wanted to entice the big investment houses to take them at that level. Because as you know, in IPO, the moment we issue IPO, there's no taker, it's a collapse, it's a failure, and no one wanted to take that risk. That risk is very huge for throwing the shares without any subscribers. So IPOs, Islamic IPOs is coming in, and we have also seen the shares in Malaysia from various perspectives. Again, Sharia is about being inclusive. We don't focus on products which are very much Sharia. Let's say it's a banking product, for example. We talk about manufacturing and IT and services industry and technology and what have you. So shares in Malaysia, Alhamdulillah, I think one of the best in the world, are having diversified sectors, unlike the other stock market in other part of the world, very much focused on property, perhaps on few government linked companies. But in Malaysia, we have so many sectors, and that reflect the Sharia can be relevant in all sectors of life. So this is again, then we can see now people are coming with Islamic technology. Interestingly, Islamic fintech, Islamic hospital. I mean, for the sake of simplicity or for the lack of better word, so Islamic banking, Islamic finance has penetrated the whole market in Malaysia, and everything started from Sharia screening that we had in 1997. That was a beginning, and Alhamdulillah, as you can see nowadays, Islamic capital market in Malaysia has grown. And I have to echo with what Dr. Aznan mentioned. The moment you touch Islamic finance, you are opening the market wider, to become wider. You are appealing to wider investor. Everyone might be able to come and tap into the financial bandwidth of Islamic finance, and that destroy the wall of religiosity or the Islamicity of products. Islamic finance has no religion, as you know. Islamic finance can be appealing to everyone, and we have to be firm on the principle, but be tolerant on the methodologies of creating new products to meet the demand of the investors, big or small. And this is what I can say at the moment, Ibrahim. I hope the historical journey of the process in Malaysia has opened up many Sharia mind, if you like, in Malaysia and beyond, to see that there's a future of Islamic capital market. The more we do things, the more we are opening new doors and new opportunities for employment, for the capitalization, for the secondary products, for the trading of it, for the listing of it, for the new employment to be created and beyond. I hope that will complement what the other two great panelists have spoken just now. Thank you very much. I hope to be engaged further in the next round. Thank you very much.
You guys can ask questions. Just search for that particular Q&A button, ask away. We've seen some questions over coming here. We're going to address every single one of those questions right after Professor Ashraf's opening salvo. Of course, Professor Dr. Ashraf Hashim is the chairman of the Sharia Committee of Bursa Malaysia. we're getting into from the broader aspect, from the principles of it, the historical of it, now moving towards the operational of it. Prof. Ashraf, can you actually explain to us a little bit more about Bursa Malaysia I? Let's understand a little bit better about this particular offering that is being currently offered by the boards, and of course to try to understand the end-to-end Sharia compliancy process and how this actually helps the investor, people like me, to learn a little bit more into Sharia investing. Professor Ashraf.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good morning, Mr. Ibrahim, my colleagues, panelists, Datuk, Dr. Daud, Dr. Aznan, and Mr. Noraizat. I think before I go into the technicalities, let me allude what have been mentioned by Ibn Tansri in the opening speech, Dr. Aznan, and my Datuk, Dr. Daud, and Mr. Noraizat. Investing in Sharia is not only, about religion. Of course, for us Muslim, we believe in that. For non-Muslim, it is very much in line with the DSG, ESG, so on and so forth. Just as a reminder for us as Muslim, the Prophet sallallahu alaihi wasallam said, "Kullu lahmin nabata an haram fannar awla bihi." Each flesh grown from haram sources, from prohibited sources, the hellfire will have a priority over it. So, wal-iyazu-billah. So this is why as investors, you are rest assured. The screening is done by the authority. The option is on you to choose the Sharia compliant products, and the processes as well. The objective, of course, to acquire Sharia compliant, as long as the objective is halal compliant, but it will not stop there. We are looking at the processes as well. For example, a trader, you want to earn halal profit, but when you are selling something and you weigh it not accurately, 1 kilo, for example, only in your weight 900 gram. It is supposed to be 1000 gram for 1 kilogram, but you are weighting it to get more profit, 950 gram. So if you do this in the process, your end result will not be also halal. In this regard, the Prophet sallallahu alaihi wasallam used to say, "Man ghashana falaysa minna." One day the Prophet went to the market and found something which is not good done by a trader. So this is the hadith that the Prophet sallallahu alaihi wasallam, the trader used to put good things that he is selling on the top and conceal the bad one in the bottom. So the Prophet sallallahu alaihi wasallam said, "Man ghashana falaysa minna." Whoever is cheating us, they are not part of us. So what I'm going to stress here is that the purpose is important. The process also is equally important. So can we go to the next slide, please? Okay, so in Bursa Malaysia, in addition to the screening methodology, the screening process done by the authority, which is the SC, we are looking at end-to-end Sharia compliant platform. So as far as our knowledge is concerned, this is the first in the world by design end-to-end Sharia investing platform, meaning that from the moment you are investing up to the end, they are all done in a Sharia compliant manner. And we have, of course, it was in 2016. It was launched in 2016. Can we go to the next slide, please? Next slide, please. Okay. Maybe as an investor, you only look at your selling and buying process. But of course, in the process, there are a lot of things happening at the back. So this is what we are trying to do to ensure everything is done in a Sharia compliant manner. So you can see from the slides that on your right hand side, it is not only trading, but also clearing, settlement and depository. So if you are a Sharia investor, at your part, you need to open a CDS with Islamic bank or Islamic investment bank or Islamic brokers. Then your money will go and flow into this Sharia compliant channel through Sharia compliant processes up to the end until the money is handed over to the seller of the security. As an example, can we go to slide 5, please? Yeah, this is an example. Of course, as an investor, you are not aware about this. In the regulation, the POs, the participating organization, for example, they need to place their money in this what we call the clearing guarantee fund. If anything happen, the regulators will come in, Bursa will come in to ensure that the rights of everybody, the seller and the buyer, are taken care of. So to do that, one of the mechanism at the back end is the clearing guaranteed fund. So you can see if you are a Sharia investing person, when you choose the Bursa Malaysia Islamic, even this clearing guaranteed fund will be managed in a Sharia compliant manner. Yeah. So I'm not going into so much detail, but those who have a bit knowledge about Sharia will know that there will be a contract when the POs place their money in this fund. There will be a wakalah bil istismar contract, and if it is not in cash form, it will be regarded as rahan. So where the money will be invested also will be in Sharia compliant instrument, as mentioned by Datuk Dr. Daud. It will be a snowball altogether. Yeah. So I'm not going to go into detail explaining about this. This is just an example, one of the processes at the back end where the Bursa Malaysia I will ensure that everything will be taken care of, everything will be done in a Sharia compliant manner. So can we go back to slide 3, please? Okay, so this is very important because as I mentioned earlier, the objective must be Sharia compliant, halal. The processes also must be done in Sharia compliant manner. So this is where we establish this Bursa Malaysia Islamic to make sure that everything done by the investors and also the processes conducted by the regulator, by Bursa itself, will be done or will be conducted in Sharia compliant manner. Next slide, please. Next slide. So as of now, the previous slide, please. As of now, there are 16 brokers with Islamic stockbroking services. You can see the name. If you are having your CDS with them, good. If you are not, maybe you can consider to have one so that you are in this Bursa Malaysia I. Yeah. So I think I will stop here. My last word is that what Bursa Malaysia I is offering is that it offers end-to-end Sharia compliance processes, yeah, to achieve your purpose, which is to gain profit, to acquire, whatever asset that you want to acquire. Thank you very much, Mr. Ibrahim. I'll stop here first.
Thank you, Prof. Questions are aplenty. So we'll start with, because we ended with Prof. Ashraf, and since Aizat is there, this question actually involves both of you plus Bank Negara. There is a question asking, is there any plan for Bursa, for the Securities Commission, for Bank Negara Malaysia, in a concerted effort to progress towards harmonizing, if not standardizing, the Sharia screening methodology, and perhaps to be used globally as a benchmark. What would be some of the ideas that you guys have when addressing these kind of questions?
Okay, thank you very much, Ibrahim. I think currently the Sharia screening methodology is undertaken by the SC. I think like I mentioned earlier, we started in 1995 because at that point in time, there were demands from investor. I think that the stock market was doing very well at that point in time. There were a lot of questions from investor in terms of the permissibility of investing on the stock market and in companies as well. That's why the IIG was actually set up to look into criteria. How do we actually investing in certain companies is permissible or not? Because the companies listed on Bursa Malaysia, it's a mix of activities. There are some permissible, there are non-permissible, and there are mixed business assets as well. So in terms of harmonization, I think perhaps it could be misunderstood that the screening was actually done by 3 different parties altogether. But as far as listed companies are concerned, for the purpose of coming up the list of Sharia compliant securities, it is the purview of the SEC of Securities Commission Malaysia. But of course, in Malaysia, we have put a robust governance framework, Sharia governance framework. We have the Sharia Advisory Council at the national level, both at Bank Negara as well as at the SC, and also the Sharia advisor at the industry level. I think in terms of the composition of the board members, we have some common members who actually sit in both Bank Negara as well as the SC, Sharia Advisory Council. So in terms of harmonization, I think in terms of the ruling, I think because they cater for the different market as well, the SC for the capital market, Bank Negara is for the Islamic banking and takaful industry as well. But there are certain rulings which are applicable to both as well. So I hope I answered that question. In terms of making our Sharia screening methodology international, I think we developed the screening to actually cater for our market as well. But if you look at other providers as well, for example, index provider, they also have developed their own screening methodology, as Dr. Daud has mentioned, and Daud Jones in 1987. I think in terms of the screening methodology, we are actually aligned with international best practices in terms of looking at the activity as well as at the financial ratio. In fact, I think we also have one, which I mentioned, the qualitative aspect as well, which are not, adopted by the other index provider as well. In terms of Malaysia, because it's undertaken by the regulatory authority, I think we are able to actually get very detailed breakdown of the activities of the company, as well as in terms of the financing aspect as well. This is an important aspect which other index providers do not have, because as regulator we have the power under the Act to request for information. So for example, if you look at the borrowings of the company, what is disclosed is total borrowing. So you may not be able to actually tell between the conventional and Islamic financing. So we are able to actually do that. So in a sense, our screening methodology is very unique. And to some extent, it's more reflective of what companies have in their balance sheet, or in terms of the contribution from Sharia non-permissible activities within the company itself.
Prof. Ashraf, is there anything to add from the regulatory aspect?
Thank you very much. I think Aita has put a very good answer to that. Differences, first of all, we have to really understand that if you compare the decision made by the SAC of Bank Negara Malaysia or the SAC of
Let's focus now on the core question that everybody seems to want me to ask. What is the status for short selling in equity? Is it permissible? And why are we allowed to short in CPO futures, but we're not allowed to short in equities? Any of the panelists want to take on this question? Okay, let's focus on the next question asked by Arif Wahab. What are the status for short selling in equities? Is it permissible? And why are we allowed to short in CPO futures, but we're not allowed to short in equities?
I try to understand the question, Mr. Ibrahim. Are you asking about why we do allow short in the futures commodity but don't allow the same in equity? Is that right?
That's correct. That's the question, yes.
Okay. Okay. I just assumed that was the question because the sound was not that up to the mark. Basically, yes. I mean, it's not right. Fully right that statement because we do allow short as well in equity for the regulated short selling because those who are able to manage the risk if anything happen to the market crashes and the short seller will be able to to get the equity from the open market in one way or another. So we don't allow the regulated short sell or the short in equity. We do allow the a kind of short in commodities future because it was an old fatwa in 1998 or early 2000 because we rely very much on the function of clearinghouse because clearinghouse in Malaysia and many other part of the world they have all the power and function to ensure the delivery of the asset to the parties to the contract. So we need to see the whole ecosystem environment. So we put the Shariah argument plus the regulation of it. So make sure that everyone will be safeguarded in one way or another. In fact, from the legal Sharia perspective, there were discussion among the scholars whether we can sell what we do not own without owning it. So there are many point of view, and many scholars have allowed it. Ibn Taymiyyah, Ibn Qayyim, provided we are able to deliver in the future, or in the case of Imam Malik or the school of Malik was saying that you can do that without any problem, provided it does not belong to the food item. So this is one classical point of view in the Islamic jurisprudence. I hope I can give a very short and sweet answer for that. Thank you.
Can I? You
Yeah,
can
please.
listen. You can
Go
hear
ahead.
me.
Yeah, Dr. Aznan, go ahead.
Happen in my area, I'm not sure what happened today. But to come from what Dr. Daud has said just now, I try to understand also the question. I can't hear you well when you put the question. But I believe the issue of short selling over some underlying is the debatable items everywhere in the world. So Securities SAC of SC has taken the points that short selling means that selling something that you do not own is permissible provided that you can ensure that you can deliver. That is the opinion taken by some jurists on that matter. So we believe at the SAC level, because of the system that we have in the Bursa Malaysia and also the trading system that we have, we can ensure that delivery is almost certain to be delivered on that matter. That's why we allow for short selling on that matter, provided that the underlying item, the underlying business, underlying product that you want to short must be Sharia compliance. That's why you cannot, you cannot short sell on the financial product when it comes to derivatives. You can short sell on the commodities, on equities, provided the underlying the commodities and the equities are Sharia compliant purposes. The classical jurists, when they don't allow for short selling, in their opinion, because there is no guarantee that you can deliver. That's the reason why they were very cautious on not allowing the short selling. But the system that we have in Bursa with the depository, with on clearance and everything, in case of when you short sell and you were unable to deliver, Bursa framework and the dealing framework will ensure that you will still deliver the subject matter by either yourself or the system of clearance will allow the subject matter will be delivered. Because of that consideration, the SAC of SC took the opinion that we allow for short selling, even though the subject matter is you don't possess yet. We allow because of the issue of non-delivery would not arise in case of our model. That's the background.
Mr. Ibrahim, can I add a bit?
Yeah. Yes, Prof.
Yeah, I echoed what Dr. Daud and Prof. Aznan were saying. when we do our ijtihad, when we take our Sharia view, we look at the circumstances that we are in. So the illah, or the reason why it was prohibited, because of that illah or that reason, the possibility of delivering the underlying asset. But when you are doing this under a comprehensive system by Bursa and also SC, you are almost certain that this illah or this reason has been, can be overcome. For record, I think the non-delivery, we did the study before it happened, but it is only 0.00001. It is, in that sense, very, very minimal and very, very minor indeed. In that case, if that happened as well, the regulatory framework will come in to make sure that everybody, the buyer will be safeguarded. So the buy-in process will come in, or at the end, cash settlement also will be done. So the rights will be protected.
Yeah. Another question, more for investors as well. BK is asking, how do we dispel the notion that Islamic returns are lower compared to conventional returns for the same product? Maybe any of the panelists can take this.
The contention that the return of Islamic, whatever dividend or profit for the same product, is not that right, because the same product should be able to give same return at the end of the day. Perhaps the issue arises when we have different portfolio of the asset. Let's say we have 30 stock altogether versus another basket of share of 30 stock with different composition. Perhaps in that manner, it depends on the cycle of the market, the cycle of the business, the cycle of what have you. For example, nowadays, if you happen to hold stock in the rubber and glove related industry, so your market cap will fly high because you happen to be at the right time, because the demand for the medical equipment and the rubber and glove related products will go up. So this is something that is not the function of the Sharia. This is beyond the function of the Sharia. This is a function of stock selection, stock fundamental analysis, what to buy, what to sell, how much to buy, how much to sell. This is the matter of human intellect to play around. Pardon my word, play around to choose the right stock that can give better return. And doing that, every fund manager is not consistently get what they manage to get. Sometimes they don't manage to get. This is the matter of professional to show their muscle, basically, to manage the Islamic compliant stock vis-a-vis non-Sharia compliant stock. Thank you.
If I may add, I'm not sure whether you can hear me or not. Okay, sorry.
All good, Dr. Aznan.
It's not so good. I think I occurred what Dr. Daud has mentioned. It's nothing to do with whether it is Sharia or not. It's more on how you select your portfolio in that sense. Of course, there are some areas that you cannot touch. For example, maybe perhaps at one time the liquor company is performing well. Of course, if you look from that angle, yeah, that would be a disadvantage to you. But we have to look it from different angle. As a Muslim, you have your own preference. Like it or not, your preference has to follow the Sharia principle. If you are non-Muslim, even as I mentioned just now, we should always prioritize stock and shares that is basically upholding the principle of responsible investment. So if you go on the responsible investment underlying and you put the Sharia underlying and you compare between the two, you will see that actually whether you are it's not about whether you are investing in Sharia or not. It's about your selection of portfolio. I don't want to mention any of the what we call on the portfolio as example. Me myself, I advise some of the portfolio in which investing in Islamic, and we make a comparison between them and conventional. In many situations, this fund perform better than conventional in that sense. Arabesque fund, for example, just to mention one, for example, we make a comparison between Islamic and conventional and responsible investing. in so many years, you can see that this fund perform better than conventional in that sense. So I believe it's not about whether you do Islamic and then you get a lower return. It's about how you choose your choice of portfolio and how you balance your portfolio to ensure that you are not worse off in terms of your investment.
Thank you, gentlemen, for speaking. We have to draw this conversation to an end, but there's plenty of questions that are being asked. Many of them are actually fantastic questions, but I can't get to them. I'm pretty sure there's a lot of platforms that can be carried forward, moving forward. I'm sure that the webinar attendees can actually get access to Prof. Ashraf, Aizat, Dr. Aznan, Dr. Daud, and I'm pretty sure you guys can have actually access to them directly. Again, thank you, gentlemen, for taking the time to speak with us. We will take a short break. We will end the session now. We'll take a short break, maybe 2 or 3 minutes before we start our second session. Don't go anywhere.